It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast, your knowledge-based property podcast. And we're doing it 7 days a week, even right across the holidays, so that you keep right up to date with what is happening, all corners of the Australian housing property market, as heard on a wide variety of podcast platforms, including iHeartRadio. You can also hear us on Spotify, Apple Podcasts and Amazon. Now, if you're trying to figure out what day of the week it is, if you're still on holiday, it is a Friday morning, January the 10th today. Bit of news from the ABC reporting the Australian property prices are expected to see modest changes in 2025, with some analysts predicting a mixed first half year followed by a bit of a recovery. So here we go. It hasn't taken long. It is prediction time already. Prices are forecast to rise 3% this year, with growth accelerating in 2026. However, concerns do persist over weak construction capacity and risks from China's property downturn, which could negatively impact on the Australian housing property market. Now, when you think of China's real estate market, you don't necessarily think what is happening in your own backyard, but it does affect us, which does tell us that the global economy ain't that big. We can all catch these economic colds. One cough, as we know, it spreads from country to country, and the world economy's health is going to be a major factor, especially when you weigh in the Trump factor for 2025. But right now, let's catch up with Alex Cook, one of the directors at Resort Brokers. And good morning to you, Alex. Welcome back for the very first time in 2025. How was that all-important break over your Christmas, New Year period?
Greg, it was a fantastic break. 2024 was a big year. Plenty to eat, plenty to drink. Still actually in holiday mode at the moment, not back until Monday. So sapping up the last few days of the Christmas period. But yeah, it's been a fantastic break and it's good to be back.
You and me both still sort of enjoying the holiday mode, and if you are one of the people heading back to work on Monday, enjoy the next few days. Now, you guys recently published your annual management rights industry report. And hey, this is some great information here for people looking at entering the industry for 2025. So perhaps step over some of the information the report offers up and provides for people.
Look, it's a report we're very proud of. We're in our third year now. We've been doing it for 3 years. It dawned on us a few years ago that management rights was perhaps one of the few asset classes which didn't have an annual report. You know, your Ray Whites of the world will put out a residential report and your CBREs will put out a commercial report, but there's really nothing there talking about the management rights industry. And it coincided with a time where we hired an in-house property analyst who started crunching the data of all the sales that we've made over the years. The report's twofold. It's one is to give people an understanding of the scale of the business, and perhaps some of those stats I can touch upon in a minute, because there's some interesting stats there which, for people that aren't in the industry, really highlight what a big and important industry it is. And then we also look at some key sales, average multipliers or cap rates that properties are sold at in different regions over the last 12 months. And we also look at some sort of key trends in the industry over the last 12 months and where we see it going over the next year. So luckily, we control about 60% of the market. So it's a very comprehensive report, which has been well received by all stakeholders in the industry.
Yes, because last year we covered off a lot of information for those completely unfamiliar with the management rights sector, because it can sort of fall into this category of, I don't understand what that is, and people don't give it a second thought. But hopefully last year during 2024, we broke down some of the myths with both you and Nick stepping us through the sector, because there is quite a bit to actually understand. So let's get back to this report. What are some of the key findings or headlines that you have for the listeners this morning to digest?
I think the scale of the industry, which we've highlighted, is something that people that don't know a lot about the industry will naturally be interested with. When we first started this report 3 years ago, we were reliant largely on our own data. So we've worked out that probably the approximate value of management rights businesses is about 9.4 billion. There's about 4,300 strata schemes under management by the management rights model across the country, managing about 310,000 lots. And we've calculated the average amount paid per letting appointment in a permanent management rights is about 18,000. In a short-term management rights is about 60,000. And we've analysed that there's probably about $210 billion worth of real estate assets under management by the management rights model. So it's a good indication, it's not a small cottage industry that people once thought it was. It really has become a proper corporatized, large-scale asset class.
Yes, that is a very big number, which does indicate exactly what you say. It is not a small industry any longer. Now, the report, it does examine the industry as a whole, as you say, and includes this transactional data. Perhaps outline how the management rights are typically valued or priced, and how this can vary depending on the type of property or, in fact, location.
Management rights are sold on what we refer to as multipliers, sales multipliers, which is really just an inverse of a cap rate. So it is a multiplier applied to the net profit of that business. So, for example, a permanent management rights business might make an annual net profit of 500,000, and that might sell at a 5 times multiplier, which means it's worth 2.5 million. Multipliers tend to range, roughly speaking, from anywhere from 3 times up to 6.5, 7 times. The biggest driver of multipliers being the scale of the asset. The larger the net profit and the more number of units under management, the higher the multiplier will be. And also the location. Southeast Queensland is obviously the home of management rights, where we have the most number of schemes, the most robust legislation. So multipliers tend to be higher in Southeast Queensland, and they tend to be lower in the regions where the asset class is less well known. So certainly the scale of the asset, the location, and also the number of years on the agreements. So management rights are sold with up to 25 years on the caretaking and letting agreements. Obviously, the closer you are to that 25-year maximum, the higher the multiplier will be.
We are talking to Alex Cook this morning on our Friday, finding out all about these management rights and just how big the industry is. We'll come back and we'll talk more after this.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
And right now it is time for another property tip. We go to David Wood, the principal there at Bell Property. Good morning, David. What have you got for us this morning by way of a property tip?
Oh, good morning, Craig. Yes, I think the tip that I'd like to share is when people are looking at period houses and looking to do a renovation, I think it's really important that they engage a planner before they purchase the home, because when you look at the homes on face value, you think, yes, it can handle this style of renovation, or I'll be able to go up at the rear. But there's more to it than that, and only the planner knows all the ins and outs of doing it. So they can quickly look at a home and say, we don't believe this is suitable for a second story extension for reasons of light with the neighbour, or proximity to the street, or the angle of the viewing from the street. They're all important factors when you're buying a period home to renovate.
Yeah, I mean, sometimes ignorance is bliss. I remember buying my first property at 19, which was an old villa, 1925. I can't tell you how much work I put into this, David. And looking back at it now, if I had the same buying choice, I would say I can't do it. But, I was young back then.
That's right, and we all were, and our first homes are all stories. But today there's so much money involved that if you get it wrong, it can be extremely costly.
Exactly right. So that is some very, very good advice. Thank you for that, David.
From buying strategies, a fluctuating market, the importance of data, geographical differences, confidence in the market, rental yields. Stay informed every morning from 6 a.m.
Yes, it is a real estate Friday. I know it's quite difficult just keeping track of the days at this time of the year. We are back with Alex Cook and talking about about management rights, along with other things, particularly this report that they have released. So, Alex, what notable trends has your report identified, both from perhaps last year and looking ahead to this year of 2025?
I think an interesting trend for a lot of listeners will be around letting pools. As we've discussed before on this podcast, the two major income streams for a management rights business is the caretaking salary, the fixed salary that you get for looking after a strata scheme, and the letting income. So the income that you get from managing the units in your on-site letting pool. What we've definitely experienced over the last 12 months is that a lot of investment units, because of the boom in apartment accommodation, have been selling to owner-occupiers. So the letting pools of a lot of management rights businesses, particularly permanent management rights businesses, have diminished, which in some cases has reduced the profitability and the value of the business. Having said that, rents have gone up, and obviously the income from a unit is a derivative of rent, so that has increased, has helped to put profits back up. And also caretaking salaries tend to be CPI linked, and as we all know, CPI has been very high over the last year or two, so we have seen good increases in salaries. So from a profitability point of view, we've seen a depletion in letting pools, but we've seen increase in rents and body corporate salaries, which has probably overall seen a fair stability to the profitability and the value of the market.
Well, I guess what we should do before we let you go is to just do a little bit of a wrap-up, a summary for last year, for 2024, for management rights and the industry, and what sort of things you're hoping to see, the outlook for 2025.
We're bullish. We've just come off the best year we've ever had. Management rights, fortunately, because they do sell at looser cap rates than a lot of commercial assets. Even with interest rates going up, they still produce really good returns. So we certainly haven't seen a fall off in demand over the last 12 months. And we go into 2025 with a very similar sentiment. And the value of those assets from an average point of view is very similar to last year. So I think we went into last year with about 50 sales in the books. So record year last year, and we're anticipating another one this year. So strong year for management rights.
Yeah, and towards the end of last year, of course, we were talking quite a bit about the strata side of things, all sorts of things happening around the country. I know that you were part of that, and we'll no doubt be talking more about strata as we progress through 2025. Hey, Alex, that is great. That's your podcast done this morning. Get out and enjoy the next 3 days before you're back into it proper come Monday morning.
Absolutely. Thank you so much for your time, Craig. A pleasure as always.
From first-time home buyers to seasoned investors to breaking property news, discover the stories behind the real estate. We connect you to the best real estate information across Australia. The Real Estate Podcast.